Good morning. This is Mac in Oz, and welcome to another Buy Point ASX video. This morning, we're looking at Wesfarmers, WES, on the ASX. As the opening title suggests, most of you will know Wesfarmers as the company that makes all the real money out of Bunnings. Holding the real estate upon which the many Bunnings buildings are built, as well as other consumer staples like Kmart, etc. But one of the features of Bunnings is the expansion that is picked up on this photograph of their new chemical, energy and fertilisers division. Certainly in the area of fertiliser companies in Australia. The current contenders are some of the worst companies in Australia, so they're on a winner there as far as I can see. But let's get into the standard analysis of Wesfarmers, what I think about it in general, and why I think it is approaching a buy point in particular. So we start as normal with the basic black chart. The basic black chart is meant to illustrate very clearly the number one consideration in determining whether or not you're going to buy a stock, in my humble submission, which is, do you think the stock has seen its all-time high price? The basic black history chart shows you that that Wesfarmers, Freudian slip there, has essentially done nothing but rise in price since its listing, or since the current records began back in 1996. This is the basic chart that you want to see in any company that you want to invest in, if your intention in investing in general is to establish a long-term portfolio. If you're interested in trading, if you're interested in getting rich quick, this analysis is not for you. Change channels immediately. If you are a normal individual investor in Australia and you're trying to establish a portfolio that will build wealth securely, comfortably and over time, this is what you want to look for in the chart of any company before you buy it. Now, here is the relevant slice of the chart for considerations about companies since COVID. COVID was a big shake-up. You see it down here, and it caused all kinds of commotion in the markets. Many companies growing immediately and then falling away, or vice versa. The significant consideration is, how did the company cope with COVID? How did it cope with the supply chain crisis that followed it in 2022? And how has it proceeded since then? And as you'll see, Wesfarmers has done a very solid job, and solidity is what we're aiming for here with a stock which is in the top 20 on the ASX. You're not investing in these sort of companies if you want to set the world on fire. Now, here is the particular focus of Buy Point ASX, the indicators. The primary indicator is the MACD, which you see down here, and the secondary indicator is the simple moving average envelope that you see on this chart, along with the price action line. The simple moving average envelope is the 20-day, 50-day, 100-day and 200-day simple moving average lines, because these are the primary trend indicators as far as technical analysis on a chart is concerned. And what we're looking at here is trend investing. You are looking for companies that are on an upward trend at the time that you buy them. This is an overlay to the consideration of whether or not the company has been consistently growing during its history and whether or not you think it is going to continue to grow to all new all-time highs. Mainly just from the psychological point of view that you don't want to buy a company and then see it slump over the next couple of months. So Buy Point ASX, as the name suggests, is about identifying a good time to buy a company. I'm not recommending that you buy the companies that I analyse. I'm simply suggesting to you the best time to buy companies that you might already have decided that you want to include in your portfolio. And here is the close-up, what's been going on over the last couple of years. You see this period of relative consolidation here, followed by a little growth spurt, then the slump here, and as you'll see in the next slide, we're getting close to a classic buy point. The most recent classic buy point is illustrated here, where you have the golden crossover on the MACD well below the zero line. And here is the most recent movement in the chart for those of you who are into candlestick analysis. This is what's been happening with the company this year, and you will see that it is heading for a new buy point, relatively shallow below the zero line. So this is more about a consolidation buy, which is a current fixation of mine, trying to identify the indicators of when to buy a company which is clearly in consolidation, which means it's going sideways. You can see here that the simple moving average envelope has all the three shorter time frame period indicators going down, the 200-day simple moving average starting to trend down. It is when those lines start moving up that I'll be suggesting that you buy the stock. Here are the basics of the company's financials and fundamentals. You can see that the company has consistent revenue growth. The operating margin is again relatively consistent, and net profit after abnormals has very solid growth. And solidity is the name of the game as far as Wesfarmers is concerned. This is not a company that is going to set the world on fire. This is about a company which is as fundamental to the Australian way of life as you can get. And what you're banking on when you buy into Wesfarmers is that the way Australians live is going to carry on very much as it is now, well into the future. And here is the relevant extract from the company's most recent half-yearly reports in February. The number I focus on is this net profit after tax of $1.6 billion. You can't be doing very much wrong if you're generating a net profit after tax of $1.6 billion. But what I particularly like about Wesfarmers management is that they are so droll as to suggest that they are going to deliver satisfactory returns to shareholders over the long term. So they're not telling you that they're going to set the world on fire or make you rich. What they're telling you is that if you buy this stock today, then in 20 years' time, the highest price the stock has ever achieved will be in the future. That's it for today. here is the disclaimer.